Welcome back to another episode of Palisade Radio. I'm your host, Tom Bodrovics, and joining me today is the president, editor, and publisher of the ordoracle.com, Tim Ord. He's an author and also the recipient of a Market Timer of the Year award. Tim, it's a pleasure to have you on the podcast with us today.
Thank you. Thanks for having me on.
Absolutely. Since you've had such a great career, I know you started as a stockbroker in the early 70s, and I just wanted to see if this current market environment reminds you of anything in particular that you've seen through the years.
Yeah, actually, there's a lot of parallels to 2008. It's 12 years ago. But I noticed the VIX hit 80 and this current in the March decline, and also hit 80 back in 2008. And both times the market bounced. I don't think we're all done yet. Over the years, I noticed to really get solid bottoms, the 10-day average of the trend usually gets at a minimum 1.5. And so far, what we haven't had in this decline, but in all the other declines in the market, is a 10-day trend. That's an ARMS index, it's TRIN, called Richard Arms back in the 70s invented it. That's right. Sometimes it's called the ARMS index, but it's the 10-day trend, TRIN, and every market decline, every market crash, I guess you might say, or significant market decline, the 10-day trend at least got to 1.5. Sometimes it got 2, 3, and 4. But on this particular decline in March, the highest it ever got, I think, is a little over 1.1. So I don't think we've seen the final lows of the market yet. We've rallied up here over a 50% retracement, or we're sitting right at it. Can we go a little bit higher? Maybe, but I think this advance is running out. I don't see a top right now, but I think one could develop over the next several days, if not, or at least within probably several weeks. So I don't think the final lows are in yet. As far as the market's concerned, I think there's another crash at least tests the low of March low, if not breaks to a minor new low. But I do think 90% of the decline's over. So the bad part's over, but the final bottom, I don't think it's been seen yet. So, but I do think it will be between now and August where the market bottom will form. So don't know exactly what date, but so a little bit of patience here. I think we'll come out on the other side of this advance fine, but it'll be a kind of different environment. What worked before the decline, what sectors were strong, will change, and what will come up next, I'm not sure. But I do think one sector that will prosper significantly is actually the gold and gold stocks. They haven't done anything since basically 2011. They moved sideways since 2016, building what they call cause. Cause is a sideways movement that actually builds energy for the next move up. So the market has built quite a bit of energy in the gold and gold stocks, and I think they could be one of the leading sectors once the final lows are in, which I think again would be between now and August. So that's one sector. Another sector I'm not for sure yet. I don't think the tech sector is going to be one of them. Healthcare, I know, is real strong right now. I don't think that's going to be one of them. It'll be something else. We'll have to wait and see, but it'll be a different animal, I guess you might say, after August, what develops from this.
As we talk about gold miners and gold mining stocks, are you looking at anything in particular? Like you said, gold stocks. So are you looking at producers or explorers?
Actually, everything. What's interesting, I think it's the silver to gold hit extreme. It got I think it's silver to gold ratio. The RSI got down to 11. And the last time that did that, I think it was actually 2008. I'll have to go. I don't have that chart right in front of me, but every time it got down down around 10, silver started to outperform gold basically that point on. And so we reached that 11% RSI or 11 RSI reading here back at that March low. So silver could be one of the leading indicators, and it's been really, I guess you might say, a dog over the last several months. I think you might, on a very short-term basis, you might see a retracement in silver. But on a longer term basis, I think you'll see a $25, $30, $40, $50 silver again. Probably in the next, really several years away. But that's what it looks like is coming. So that's interesting. And gold will do fine too, but actually between the two, probably silver will start to outperform gold. And the reason why I say that is silver in a really a bull market, silver always outperforms gold, and gold stocks always outperform gold. The gold stocks, either explorers or whatever, they'll outperform gold too. Gold will do fine, but silver stocks and gold stocks will do better.
Absolutely. As we're looking for that to start to pick up off the bottom, do you have any favorite indicators that you look at, such as the Commitment of Traders Report or the RSI?
Actually, I've been watching the VIX right now, and the VIX is since it's so high right now, VIX kind of leads the market. If you notice, today we hit a higher high on the S&Ps, and the VIX made a lower low. Well, that kind of confirms that even though you may have a minor pullback here, because we did go back up and test the April 17th high, which is a couple of Fridays ago. We did it on lighter volume, so you may see a mild consolidation. But the VIX hitting a lower low suggests that the market still has energy to go higher. There's quite a few different other indicators, too. I like to watch, the VIX, what I'm saying, it leads the market in the opposite direction. So if the S&P is making a higher high and the VIX is making a lower low, that confirms each other. But if the S&P is making a higher high and the VIX is making a lower high, that's a divergence, and chances are the VIX will be right and the market is making a short-term peak, and vice versa. If the S&P is making a lower high and the VIX is making a lower low, that's bullish because the VIX rules the S&Ps. At some point, the VIX started making a higher high. That's how I use that. And I also watch McCollum Oscillator real close. If you stay above zero on McCollum Oscillator, everything's fine. Market usually moves higher. But once it starts breaking below zero, which so far we haven't yet on this advance, normally if you do start breaking below zero and the market keeps making higher highs, ultimately I think you'll come back down again. So I do like McCollum Oscillator. I do quite a bit of work with the trend. Trend off this low is really, in the past, when you got a trend above 1.5 and you got downtick readings of at least minus 300, a lot of times those are kind of climatic lows and a good buying opportunity. So I do the trend in ticks quite a bit. But recently I noticed the trend is not showing panic at all on either these minor declines that we've been having going off the March 23rd low. And that's kind of worrisome. Usually those type of rallies that don't have panic in the trend, readings above 1.5, usually those rallies are short-lived. And it's one of the reasons why I think the current rally, even though it's at the moment momentum's still up, I don't think it's going to go far because we have not had panic in the trend to really build energy to push the market higher. So those are some of my indicators that I really watch closely.
Getting back to gold, could you give us an overview on the 8 and 16-year cycle theories?
We had that. I don't have that chart right in front of me, but yeah, there's a 8-year and a 16-year cycle, and it bottom in around 2000, 16 years later, bottom in 2016, actually in 2015, late 2015. And so you had 16 years on to 2015. You come up with 2030, 29. So we're just kicking off here. We got just to get to the mid cycle. I think we have at least 3-4 more years. I'm seeing a lot of cycles come in around 2024. So that could be an important year for some sort of a high, I think, in the gold market. We've got a ways to go yet, but if you go back and look on the 8-year cycle and 16-year cycle in gold, you'll be amazed how it's like clockwork how that works. So again, the last one came in like basically January 2016. So we're in a bull phase right now. And if you notice, the money supply is just going through the roof here, which at some points is inflationary. And I do a ratio in inflation deflation. I got two indicators I follow, and recently over the last couple of months, it's just going right through the ceiling. How high will it go? I don't know, but inflation is going to come back and in the markets, and so that's one of the reasons why I think gold stocks, and silver stocks are going to be one of the leading sectors probably for the next several years. So,
is there anything in specific that we're going to be able to look at to see where that inflation is going to start?
It's hard to say. I think real estate prices probably could really boom. Really, I don't. It's just going to show up pretty much everywhere. Oil prices I know is just totally plummeted here, and they're saying that's deflationary. Maybe not. That's just one sector. But from what I'm seeing, inflation is going to, if you pump this much money into the world economy, it's just not good long term. That's why inflation is starting to rear its ugly head. As far as where it's going to show up first, it's hard to say. It's already hitting the markets right now, according to my ratio. But it's not noticeable, I guess, right now. But I think a year from now it'd be definitely noticeable.
So throughout all the markets that you look at, Tim, what are some of the strongest signals that you're seeing right now?
Well, I have to say the GDX market breaking above the 31 area, that trend line went back to 2013. So that's what a 7-year trend line. And if we close above it on the weekly time frames, really we need to close above it on a monthly time frame, and we think that's probably going to happen. Month is just, end of the month is just days away here. That's you get a type of signal like that, and the monthly Bollinger Bands are also turning up on gold. Those monthly signals, they pretty much dictate what everything else will do. And since those monthly charts have turned up, that's a big implication that even though not many people yet are paying attention to the gold stocks, it's not in the headlines yet. It will be probably before the year is out. So that's probably the biggest signal I got this year was the breakout in GDX and the Bollinger Bands turning up on the monthly time frame. So it'll be interesting to see what comes, because a lot of these gold stocks, silver stocks are just basically penny stocks. They're all over the place for 5, 10, 20 cents. That some of these are probably be $40, $50 stocks in the future. And that's hard to believe, but I was in a major gold market back in the late 70s when it took off, and 3-cent stocks went to $300. I remember. I can't remember what name it was, but that's pretty unusual for one to do that, but it's not uncommon back then. And I'm thinking we're heading probably for that in this go around.
I'm sure everyone would like to see that that's listening. Any concluding thoughts as we wrap up?
No, I think this year it could be, I don't think we've seen the final lows yet, just because the 10-day trend has not reached 1.5 yet. That doesn't say we're at a top right now. I don't see a top today of any consequence. So we could still ride up, possibly into May. That's starting to look like that now. And there's an old saying, go away in May. So it might be true this year too. I don't know, but I don't think the final lows are in. So between now and August, I think we'll see some dramatic up moves and also some dramatic down moves. And we're seeing the dramatic up move right now, but I don't think it's going to last too much longer. So I'm not a big bear, because I do think 90% of the decline's over, but I think the March 23rd low at a minimum will be retested, and we'll probably break it some. So those are my closing thoughts.
If anybody wants to learn more about technical analysis, your book is a good resource, as well as your weekly newsletter, correct?
Yep. I do a lot of educational stuff in my market letter. My book is pretty much volume oriented. I do a lot of other stuff. My market letter, I show, the indicators that are important at the time, because not all indicators are important. Some are lagging, some are leading. It's a good educational 35 years of indicators that I accumulated over the years. And you'll see some probably never seen before. But yeah, hope you take a look. So it's called the Ord Oracle. And my book is Secret Science of Price and Volume.
Perfect. That's Ord Oracle on Twitter and ord-oracle.com. Thanks for your time today, Tim.
Thank you. Thanks for having me on.
think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?